Hello everyone, welcome to the 2022 version of MidCat's India Risk Review. This is Tanya Singh and I shall briefly introduce the economic risks that India may face in 2022. Under this section, 10 key risks have been identified that bear immediate impact on the conduct of businesses. The first key risk that has been identified is corporate fraud and corruption. COVID 19 has significantly disrupted business environments, leading to change in business models, cash flow crunch, and remote working environments, which has exposed organizations and individuals to increased fraud related vulnerabilities. As the number of frauds has increased, the National Consumer Helpline NCH, the Consumer Affairs Ministry, has tied up with the Home, Finance, and IT Telecom departments to improve cyber fraud redressal mechanisms on the NCH. The next key risk that has been considered is weakening labor market and inflationary pressure. The Government of India in 2021 published the Periodic Labour Force Survey 2019 to 2020, which indicated a decline in the unemployment rate between 2017 and 18 and 2019 to 2020, along with an increase in the labour force participation rate. While there has been a cut in excise duty on petrol and diesel by the government, which will provide reprieve to inflation, high global commodity prices, including energy prices, continue to pose a threat for future inflation. The third risk that was identified talks about the post COVID 19 economic recovery. As newer COVID 19 variants are still being reported, like the Omicron variant, the virus is likely to continue to act as a hurdle for the economy and businesses. Companies are working on strengthening their crisis response plan and team aligned to their strategy and goals and purpose, and building an integrated resilience program that is being adopted as a strategy by many businesses. The next identified risk is economic impact of India-China decoupling. In recent years, India has sought an economic decoupling from China following hostile bilateral relations. Bilateral trade between India and China during the first 9 months of 2021 grew 49% on year to USD 90 billion. While a major decoupling has not yet materialized, the Indian government has undertaken efforts in this regard by directing the telecom sector not to engage with Chinese companies such as Huawei, while also banning around 250 Chinese applications. The fifth risk that was considered is oil dependency. In April August 2021, India imported 83.8 million tons of crude oil. The government has announced fiscal incentives on new discoveries, incentives for enhanced recovery of oil and gas, allowed exploration and usage of unconventional hydrocarbons in nomination fields, and has undertaken production enhancement contracts with private sectors for small fields. The next considered risk is supply chain crisis. There is a shortage of raw materials, shipping rates have risen, delays in deliveries, and price hikes are a few of the many challenges that are being faced due to the COVID 19 pandemic. A prolonged supply chain disruption could be disastrous for India as the country is already facing high prices due to inflation triggered by high fuel prices and post pandemic economic recovery. Another identified economic risk is high NPA and share of public debt in GDP. According to S&P Global Ratings, the non-profit assets of Indian banks will remain elevated at 11 to 12% in fiscal 2022. Public debt rose to 52% in the year 2020 to 21, owing to centers' increased borrowings to deal with the COVID-19 waves. The eighth economic risk that was considered is fiscal deficit. India is known to maintain a tight fiscal deficit target of 3.5% for 2021 in order to strengthen macroeconomic management and fiscal judiciousness. The government's fiscal deficit has worked out to be INR 5.47 lakh crore of budget estimates at the end of October 2021. These conditions might not help businesses in expanding their work. Next, we have considered post-pandemic economic recovery. According to the World Economic Forum, India is well ahead of its target to achieve commitments such as making renewables 40% of its energy mix by 2030 and managing the sequestration of 2.5 billion tons of carbon. The government has also announced the National Infrastructure Pipeline and National Monetization Pipeline (NMP) to boost infrastructure development. We have identified ease of doing business as another economic risk. According to the latest World Bank annual rating in 2020, India has identified 63 among 190 economies in the ease of doing businesses parameter. As a part of the Government of India's Ease of Doing Business (EODB) initiatives, the Ministry of Corporate Affairs has deployed a new web form christened Spice Plus, which offers 11 services by three central government ministries and departments, three state governments, and NCT Delhi. That's all for now. Thank you. Please check other risk categories on our YouTube channel. You can also download and read the detailed version of India Risk Review on our website as well as on our LinkedIn page.